Hello, YouTube, and welcome back to this dividend portfolio. We're going to be going over the portfolio. It's the end of December, December 20th to be exact. Not sure there will be another video this year, but I'm going to go over the totals for the portfolio and also do a deep dive into a fund called SPYT, which has a high dividend yield, and I'm going to go over the balancing and what dividends we got this month. So, before going into this, this is not financial advice. I'm just trying to show what a dividend portfolio could look like. Maybe for you, this is probably part of a larger portfolio strategy, and I want to just show how this can work. I've been doing this since April of this year. Have some automatic buys and a diversity of funds. So let's get into it. Grand total for the year in this column on the left is $1,454, which is pretty good considering we started in April. Um, One thing that was a little surprising, and we're going to dig into a little bit, just kind of scratch the surface. The monthly total for December is $205 in dividends, which is lower than I thought. I thought we would hit about $250. I'm not sure if there's something special at the end of the year where some dividends don't pay in December or something. I may have to look into it a little bit more. Um, but basically, this bottom row is all of the dividends that hit the account um, for this month, and the total was $205. Um, However, the um, these dividends that hit last month at the end of the month, $21, $13, and $30. I have to look at where these came from because I thought that these were also going to come in at the end of the month. Um, However, they didn't, and I'm not 100% sure why. I was kind of expecting about another $50 to come in, but I didn't see these numbers, so I'll have to look into that. So, because of that, um, I'm about $50 short of where I thought this month was going to come in. So, we came in with $205. If that is the same for next year, we can pull up the calculator and do $205 times 12 months, and we should bring in $2,460 for next year. And then with the auto buys on, it should be a little bit more than that. Um, and if I keep doing this for the next year, I don't know if we'll see the same thing in December. Once again, um, these larger dividends that came in at the end of the month last month, I thought were going to hit at the end of the month. So I'm not sure why that is. Um, but that's what we have ended up with December. Robinhood lets you see like a preview of what dividends are going to come in. So even though it's December 20th, it'll show you pending dividends, and that's what these are. So that's that for this month. Going to the charts, chart on the left is the annual sum of the dividends, just adding up, adding up. So we have the 1450 for December. I should say December down there, but that's okay. And then the monthly, we do want this to go up and to the right, and I thought this would be about $250. So we'll see. Maybe those dividends get delayed, and then we'll see them hit in January. Um, Not exactly sure why that is. Going down to the holdings, um, this chart on the right, this just is a graph showing the annual yield of the different dividends. I'm going to re-update this. The only one I updated was SPYT, and we're going to dive into that a little bit more to show some things about if that broke even or what's going on with SPYT. And then lastly, I rebalanced the weighted average. So what this is on the left is the weight of these different funds in the portfolio. This is a percentage of the portfolio, right? So JEPQ is 8.7% of the whole portfolio. SPYI is 11.54% of the whole portfolio, and so on. And then this is the annual yield. SPYT, I did have a 19 here before, but I updated it to a 20, and I'm going to update the rest of these. But without updating the rest of these, the new average, the weighted average, meaning the annual yield of all of these weighted against how much of the portfolio it is, this is giving the average of the whole percentage yield of the whole portfolio with all the diversity, and it's 11.41, which is just a little tick higher than it was in the last video. And I'll do one more rebalancing. Next is the performance. I updated all of the performance for today's video. This column on the left here, this is what it was in the last video. But since these funds are moving, I want to be able to see are any of these going up or down. So this is essentially from holding these since April or whenever I bought into them. What is the performance of these different funds? A few of them went up a tiny bit, a few of them went down a tiny bit. But overall, not a huge change. JEPQ went down less than a percentage. SPYI went down just a teeny tiny bit. QQQI down a tiny bit. GPIC down a tiny bit. JEPI is up less than a percent. SCHD is down over a percent. SPHD went up almost 1%. JAAA is down a tiny bit. We'll go over SPYT, which is down not quite a whole percent, but this is the worst performer that I have, which is also the highest weighted in the portfolio. So we're going to take a look at this one in kind of the second half of the video. JBBB is up a little bit. CLAWS is up a little bit. IWMI is up. CSWC is down over 2%. And ASGI is down a percent. So overall, not a huge amount of change. SPYT down not quite a whole percent, but we'll look at that one. So that's the portfolio. I'm going to rebalance all of the annual yields because these also can change. And anyways, that's where we're at. And on my own time, I will take a look at the the dividends I was expecting and what's going on with those. So what I'm going to do next is looking at SPYT. This one is a high percentage yield. a high weight in the portfolio, and it's a riskier position. And this is the chart here. This is the 5 year. And I didn't quite buy in April. I'm not sure exactly when I bought in, but might be anytime uh, in maybe in July or um, maybe even in August when I started buying into this. So it's down a tiny bit on the 5 year. I can see the percentage yield is 20.87%, and then we minus off the expense ratio to get that 20% yield, um, which is a little higher, but this yield can change. It can change because of management decisions. It can also change because if the total value of the fund goes down, but the dividend payout stays the same, then the annual yield will go up. So this is the only one that I updated, and I'll update the other ones. Um, However, um, since this is a high yield, this is the one that paid $100 this month and $47 the previous month. I doubled my holdings in it. So I want to get that $100 dividend every month. However, like some of the other funds that I did exit out of, if the performance is going down faster than the dividends can pay, then I could lose money. Or if the performance is going down at the same rate that it's paying dividends, then I'm basically breaking even, which is also not good. I'm essentially losing money compared to uh, what I could have if I was holding in a lower annual yield. But if the fund is at least holding steady or going up in value, I'm losing money comparatively for this dividend strategy. So, what I'm going to do is, like I said, at the beginning of the month, we got a $100 dividend, which is great. And in January, I'm expecting that to come in again. Um, However, if this has dropped 2.39%, the question is, has the dividends that this has paid at least broken even compared to how much it has dropped since I've had these shares? So what I'm going to do, I'm going to pull up my Robinhood on the other screen here. I'm not going to show you, obviously like my entire account or whatever. Um, but I'm going to look, I'm going to use Robinhood to pull up the history and the performance. So looking at SPYT, let's see if I can type this here. Um, Looking at SPYT, so this says as of today, we're down 2.39%, which for me translates to negative 140. I'm going to just round things off a little bit, but negative $148. So all of the holdings, I'm down $148. And this might be break even if I take a quick glance, at least with these two dividend payments, right? This is $100, $104, and $47. So the sum of that is 152. But there may have been at least one other payment. So if I'm down $148, I'm going to look in Robinhood. It'll show me the history of purchases and payments. So let me pull up the history over here. So I've got 104. I'll do all of it. 104.76. That was on December 2nd. And that was reinvested. And then it shows um, looking for the dividends. It'll just say dividend. Okay, dividend on November 4th, 47.25. And then were there any others? Here's another dividend, 28.65. And these are going up because I'm buying more of the fund. That might be the last one. Oh, here's another one, 12.73. Okay. So I've gotten 4 dividends from this, which means I've had it for 4 months. The sum of all of these is 193.39. 193.39. So this is the total is 193.39 in dividends. And then let's see. So the uh, chart is telling me that the sum is 45.39. That is the um, so this will take in account all of the dividends that came in with the movement of the fund the that I'm holding down $148, but we brought in 193, so that means we're up $45 um, if this holds steady and we get another 100. Let's say hypothetically we get another $100 um, dividend at the beginning of January, and the fund just holds steady. That means I'll be up 2.39% with dividends included. So I just wanted to show this that despite the fact that this brought in almost $200 in dividends for the 4 months that I've held it, because the fund is dropping and it's my worst performer, I'm a little bit above break even, but not a lot. These dividends are buying back in, which means as it buys more shares, the payments should grow larger over time. But I have to be careful because if the performance keeps dropping, um, I can at any time hit like a break even or even end up losing money if it drops a lot more. Um, and these other positions, these other funds, are, in my opinion, generally safer. Um, Even though, for example, J Triple B and Claws are down. Um, we've looked at these before. I mean, these should basically hold steady. I'm not expecting these to go up a lot or down a lot. I'm basically just looking at this annual yield. Um, uh, but some of these other ones will move a lot more, and uh, that's okay. SPYT being a lot riskier of a position could have some more significant changes. This is, once again, this Yahoo Finance. And so this is the 5 year. Does this go further than that? Not really. Um, which actually this is not 5 years because it only goes back to like about April of 2024. This hasn't been around for that long, but you can see it was the fund was hovering around the 20 to $19 share mark, and then all of the funds had a big dip in April of 2025. This was the tariff situation in the market, which I didn't time that. If I was timing it, I would be doing even better. Um, so I've only had this for 3 months. Um, it's still holding between this like 1850 uh, with a low around 1750 um, fund amount. But if we got another significant pullback, another 2% or something, I have to watch it a lot closer. But I'm hoping that it stays in this range. Um, so that's how I need to look at all of these SPHD. It's got a pretty low annual yield. If it drops 3% over a year of holding it, then even in this one, holding it for a year, I'm going to break even. Um, SPYT with a 20% annual yield, this would have to drop close to that 20% to break even on holding it for a whole year. But that still wouldn't be good because we don't want to break even, right? We want to be in the positive. When I was some of the other funds that I got rid of, they were dropping faster than the dividends were coming in, and it was worse than break even. Um, if there are any funds that I don't have that I should take a look at, leave them in a comment below, and I'll take a look at them. The next thing I'm going to do is uh, go to um, go to Yahoo Finance, and I just look at this yield. Yield is not the only thing you want to look at because, like I've learned, there's higher yield funds, um, but you can't just chase this number. You have to look at other things as well. Um, but JAPQ, for example, uh, this uh, this annual yield I do need to update as well. So if I go to JEPQ, um, there's the expense ratio, and this says the yield is 10.13 minus off the expense ratio, and we're getting like 9.8. So yeah, even this is lower. SPYI. Take a look at this one. Um, this says the yield is 11.64. We minus off the expense ratio, and it's very close to 11. It's like 10.9 something. So this is still pretty accurate for SPYI, which is pretty good. QQQI. 13.64 minus the expense ratio is very close to 13, which is still about correct. So I'm going to do this with the rest of these and do another rebalance. Like this one is down a little bit. Now, as I said before, if the performance of the fund is really good, go back to JEPQ. Basically, my understanding is the dividend payments, they're not paying off of a they're not paying off of a percentage. They're paying so many cents per share. So the share price is 58. and then they're going to pay whatever. They're going to pay something like 50 cents per share or per year, or like 6 cents per share. So this yield is recalculated based on how the fund is doing, right? So if I go to the 5 year, if they're saying, well, for such and such time, we pay 50 cents per share, but the performance of the fund is going up, which in this case on JEPQ it is, for the time that I've held it, the overall holdings are up a little over 5%, which I think it's done even better over the whole year. Then the percentage yield um, is going to go down unless they increase the dividend, right? They go from 50 cents per share to 51 cents per share, which those dividend increases can be announced and whatnot. But if the fund is going up, then this yield, based on a percentage of the price, can go down. So, but if it's going down, then it means that the performance is usually good. SPYT, last video, this was a 19 here in this box, but since the fund is going down, since the value of the fund is going down, the percentage yield has ticked up a little bit relative to that price. So anyways, that's it for this video, and if you want to follow how this fund does into 2026, it's going to be exciting. We're going to see how this grows. I wanted to see how this would all work, and again, part of a larger portfolio, depending on your situation, having some amount of your portfolio in dividends might be good for you, or having a more growth centered portfolio might be what you need. I wanted to see how this would work, and it's been fun to see the dividends come in. And this might be the last video for this year. So, anyways, thanks for following along, and till next time.